Hello there, hope you're doing great as always. Just want to shoot you another video. And those who know me a little more closely know I can be sometimes a little rough around the edges, but I always tell things how they are, right? And sometimes we have to, like if you have a close friend, right, and you actually want him to do good, you also sometimes have to be a little strict with them, right? It's not just, patting each other on the back and hey, you're doing great, everything. No, like we also have to call each other out, on our bullshit and realize then, hey, maybe we should be doing things a little bit differently, right? A little bit, be the smart guy, right? Don't just go through life and let the circumstances, shake us to the right, to the left. No, like we can chart our own path, right? And we have a certain level of responsibility, right, for ourselves, for our close ones. And whether we like it or not, well, that revolves around money, right? At the end of the day, because that influences what kind of life we can live, right? What house we live in, what car we drive, what level of healthcare we have access to, right? And so, I would like to walk through today's video and maybe shake some of you and realize that hey, maybe we should be putting a little bit more effort here. And let me start with this scene from the movie The Gambler. I really love this scene and I bet you will love it too.
You get up $2.5 million. Any asshole in the world knows what to do. You get a house with a 25-year roof, an indestructible Jap economy shitbox. You put the rest into the system at 3 to 5% to pay your taxes, and that's your base. Get me? That's your fortress of fucking solitude. That puts you for the rest of your life at a level of fuck you. Somebody wants you to do something? Fuck you. Boss pisses you off? Fuck you. Own your house. Have a couple bucks in the bank. Don't drink. That's all I have to say to anybody at any social level. Did your grandfather take risks?
Yes.
I guarantee he did it from a position of fuck you. A wise man's life is based around fuck you. The United States of America is based on fuck you. You're a king. You have an army. Greatest navy in the history of the world? Fuck you, blow me. We'll fuck it up ourselves. Which...
So yeah, as you can see, right, there is of course, certain baseline that we have to reach, right? I mean, the world is not stopping, right? What was enough 10 years ago, not enough anymore, right? We have to be smart, we have to outrun, of course, inflation, all of the things. And so here are two ways how we can go about our life, right? And at the end of this video, I want you to realize, hey, what kind of person am I at the end of the day, right? Because for many people, the life goes like this, right? They go to work, they work 40, 50, 60 hours a week, the paycheck hits, the paycheck gets spent, maybe some money gets invested, but it's a little bit afterthought, right? And, you go about your life and let's say you're in a solid position, making 100K a year, right? Which, that already puts you in a relatively solid position, right? That's definitely not common, right? So you're doing well for yourself, right? And you're, going like this for 20 years. 20 years of work. And after those 20 years, you have 2 million. Of course, you have to subtract taxes, right? And there is a lot of, kind of a maintenance, life expenses, everything, right? So even if you're saving, how much are you maybe left after those 20 years? Even if you're saving aggressively, I mean, do you even have something? Probably not much, right? So 20 years, breaking our back or breaking our brain, dealing with all of the madness of the world for what, right? That's the path A, let's call it, right? So, just going about your life, 20 years, nothing to show for it. Well, now what could be that path B, right? So let's say, you're the same guy starting at those, 20 years and you have 20 years ahead, right? Whether you're, 20 years old going into your 40s, whether you're 30 years old going into your 50s, or whether you're, already 40-year-old and going into your 60s, right? I mean, still, as long as you have, 15, 20 years, there is a lot that can be achieved on the timeline. So let's say, just as a starting point, you have maybe 30,000 invested in the market, right? definitely, again, definitely not nothing, good starting point. And let's say you can contribute 1,500 a month. And of course, it could be a little less, it could be a little more, right? Of course, the more we can, the better. Should be at least, again, 600, 800, that's a great start. And let's say for those 20 years that you're working here, you're also investing with 15% growth rate and 5% variance. So we'll get three scenarios, 10, 15, 20%, right? Depending how competent you are. 10%, they're just in line with the market, right? You might as well just put the money in the index fund, not worth it. 15%, is that reasonable, for somewhat competent investor? Cool. I mean, yeah, if you can do a decent 15%, whether the market's going up, down, kind of like on average 15%, then hey, solid, good. And 20% is like a competent investor, right? 20%, you know what you're doing, right? Of course, you check all of the boxes of competent investor, understand income statement, balance sheet, understand business model, market cycles, right? All of these hard skills. And yeah, sure, it takes time to learn all of these things. But why it's worth it in the end, right? Because if you actually run the numbers for this, well, that means that in those 20 years, you might be somewhere between 1.2 million if you're getting just those 10%, 2.3 million if you're getting 15, or all the way to 4.5 if you're getting 20%, right? Okay. So over those 20 years, if you're actually serious and competent, that capital gains actually eclipse your earned income by a lot, right? I mean, if you're competent, you can get easily to 4 million over the course of those 20 years, right? So you're double what you earn here. But for most people, do they do something like this? Like, if someone's spending, let's say 40, 50, 60 hours a week on earned income and then investing is an afterthought, isn't that a little misallocation of our time? What if we would, maybe flip it a little bit around, right? Or, once again, it doesn't need to be something crazy, but if this is what you can achieve in those 20 years, wouldn't it make sense to spend, a couple hours a week on investing? And, I'm not saying, watching YouTube video or listening to Jim Cramer on CNBC, right? But actually learning, because investing at the end of the day, it's a skill, right? Sure, takes time, takes effort. But for something like this, would it be worth it? Because when you look at my portfolio here, here in the corner, right? 1.8 million, let's say, of course, aggressive portfolio fluctuates, couple hundred here and there. But in that portfolio, most of this is already gains, right? I mean, I've already reached that point where my investment gains eclipsed my lifetime earnings, right? I mean, I'm a little bit on the younger side still. I know I look a little bit older with the beard, but it's only been, let's say roughly a decade that I had some, at least something akin to an adult job, right? And already at this point, my investment gains are much, much higher than my earned income, which is how it should be if we're, playing the game right. But it's also because, hey, we spent some time and effort on this. So what kind of person do you want to be, right? That person that's just, clocking in and out for 20 years with nothing to show for it? Or the person that gets little above and beyond, spend those 4, 5, 6, maybe 10 hours a week on investing because they understand the magnitude of impact it's going to have over those next 20 years. I know I made my choice. Now it's up to you.